Hello, we have the great pleasure of having Bob D'Loren, Chairman of the Board and Chief Executive Officer of Xcel Brands, trading under the ticker symbol XELB on the NASDAQ. Bob, a very warm welcome to you.
Oh, thank you, Craig. It's a pleasure to be here today with you.
Xcel Brands, Bob, has been at the forefront of integrating shopping, entertainment, and social media. Can you share how this innovative approach has shaped the company's success and what exciting developments we can expect in the future?
Yes, Craig. Over the last 13 years, Xcel has been an industry leader in live stream selling over linear television with retailers like HSN and QVC and others like them around the world. This year we passed over $4 billion in sales with 20,000 hours of programming time, which have positioned us to now innovate where content is going to, with short form video being the dominant force in live stream selling.
Bob, the recent restructuring of Xcel Brands has been a significant move. How do you believe that this restructuring will positively impact the company's efficiency and market presence moving forward?
So, Craig, I don't think of it quite as a restructuring of Xcel. We discontinued operations that just weren't profitable coming out of COVID, which resulted in $14 million of expense savings, which now has positioned us nicely to return to profitability in 2024. The company has been profitable every year in its 13-year history, except for the COVID period.
Let's turn now to amortization, Bob. You have chosen a conservative approach. Some would say the upfront, honest approach in reporting amortization. Now, let's consider the significant impact that impairments have had on investors in comparable companies, and could you shed some light on your choice to use that conservative approach?
Yes, Craig, it is a complicated topic in GAAP accounting. Companies have a choice to either classify their assets as indefinite life assets or assets that have definitive lives. And the definitive life method of accounting is much more conservative. But the downside to that is that it results in annual amortization expense, which creates a disconnect between the company's free cash flow and GAAP net income. So to really assess what Xcel's true earning power is, you have to add back to net income the amortization from our trademarks.
Okay, Bob, let's talk now about the big new development, Orme. Congratulations on launching this new live stream and social commerce platform. Of course, it's been highly anticipated. How will Orme set a new standard in the industry?
So, Craig, first, at its very highest level, Orme is going to change the way people shop and the way they think about sharing information about brands and retailers over social commerce, over social media platforms. Orme was built to reimagine shopping, entertainment, and social commerce as one thing. And it is the next generation live stream media platform. It's been 3 years in the making, and it is ready to go. And we expect that we will do the soft launch sometime after holiday this year, and then go into the new year pushing hard to grow the platform.
How big is the market opportunity you are addressing?
So the opportunity with live streaming is unlike anything we've seen in e-commerce in the last 10 years. In China, live streaming commerce has grown from $3 billion in 2017 to $500 billion last year, according to McKinsey. We believe that in 2025, live streaming in the US will be about a $35 billion business, with half of that coming from linear television, where we are today a large player. We believe that the US has the same potential as Asia. It hasn't happened here because there's no technology platform that has the end-to-end ecosystem required to make it scale. We have built that with Orme.
Orme certainly shows how Xcel Brands is adapting to the ever-evolving retail environment and consumer preferences. How are you positioning this company for continued success?
So first, Craig, the rate of change in retail has been breakneck speed over the last 3 to 5 years, but it's accelerating now through AI. And Orme will be a leading applier of AI in its technology. We believe we are uniquely positioned to move toward where things are going in retailing with this platform. It not only will drive our core business with brands, but it's going to drive a whole new revenue model for Xcel.
Xcel Brands has been focusing on its working capital light and highly profitable model. Can you share how this approach is paving the way for sustainable growth and profitability?
Historically, the company has been profitable, working in the working capital light model that we have pioneered over the last 30 years in both Xcel and other platforms that this management team has formed. We needed to pivot in 2019 to a working capital heavy position because of licensees that failed, but we were able to come out of that coming into 2022 with the growth that we created in top line sales of our brands. And now with the expense cuts that we made and the new licenses that we've recently signed with industry leaders like G3 and JTV and One Jeanswear Group, we believe not only will we return to profitability, but we see strong top line growth for many years to come. In fact, hundreds of millions of dollars of revenues generated through these license agreements as we go forward over the next 20 years.
Bob, investors in microcaps love to see a significant commitment by the managers and those closely associated with the company. Could you explain the closely held share situation of Xcel Brands?
Insiders today own in excess of 60% of the outstanding shares of Xcel. We have all been believers in the company and held our positions. And someday that may change, but today we control a majority of the company and will continue to do so.
That is always good to hear. That leads to the next question about management. It is another big question that investors have for any company, and especially for a microcap. Who are some of the key players on your team?
So we have a management team that have worked together for many years through many companies, some of us as long as 30 years. Some of the key players are Joe Falco, our chief merchant. Joe has been the absolute genius behind our interactive television business. Joe's responsible for driving those $4 billion in sales. Ken Downing, our chief creative director, is one of the most highly regarded creatives in the fashion industry and in the branded sector. And then lastly, our head of business development, Seth Burrows, has been with me for over 22 years. He knows this business from the ground up, every aspect of it, how to drive it and how to make it work. And I'm very proud of this team, what they've done over the years, and particularly what we've done by pioneering live streaming over television and now over the internet with all that happens here at Xcel.
Okay, Bob, I'm going to put you on the spot here. Talk to our investors. Give them the essential value proposition. Why should investors take an interest in Xcel Brands today?
So, Craig, first and most importantly, for anyone that's been doing this for a long time, there's a management team here that has a proven historical record of building some of the largest brand management companies in the U.S., and we bring all of that experience with us in terms of our core business. We are today the industry leader in live streaming over television. We think we're going to bring all of that now to live streaming over the internet in short form video format with our next generation short form video content platform, Orme. So those are the key reasons we believe that from a management and from an operating perspective, we're an attractive investment for investors. And then lastly, there's been a significant disconnect in the balance sheet value of our assets and the stock price, quite frankly. When you consider the recent sale of the 70% interest in our Isaac Mizrahi brand, which sold for 6 times royalty revenue, and we have a forecasted 2024 top line royalty revenue of about 18 million. Well, if you apply that same multiple, that would imply on a company that has 5 million of cash and 5 million of debt, about $100 million of value in our assets. Well, that's 4x our current market cap. So we believe there's plenty of intrinsic value in our assets. And then we believe with Orme that we are about to launch the next generation of live stream social commerce.
High intrinsic value plus this new launch of Orme. Congratulations again on that, Bob. And thank you for sharing the story with us today.
Thank you for having me today, Craig.